All right, it's time now for the chart of the day. And today we turn east to China, where we see Chinese manufacturing growth contracting to finish 2018. So the chart we're looking at here, China PMI, so a reading over 50 indicates expansion in the manufacturing sector. Andy was discussing this earlier. A reading under 50 indicates contraction. So we saw a 49.7 reading in the month of December. A little hard to make out on the chart there. We've got the distortion from the decline we saw in the 2008 financial crisis, making that 50 not quite as vivid as we might otherwise like it. But this is the first time that we've seen an overall decline in Chinese manufacturing since 2017. Also, something that stood out to me in this as well, Andy, is the sub-index for new orders, basically giving you a sense of how many people are coming to the sector for the first time, is below 50 for the first time since June of 2016. And this hits on a theme that I think is starting to emerge more and more in markets, which is that the Trump bump, which could be stocks higher, optimism higher, activity higher, everything was getting better after he was elected. 2017 was really a tremendous year for stocks, the global economy, investors. That's all starting to come undone. And we're seeing the cracks here in the US, we're seeing the cracks in China. And when people point to things like the trade war, slowing global growth, this is really what they're talking about.
It's not all that. That's what the markets are telling you, right? He's not all that. It's not all that. And yeah, I think that's true. And, you know, the Chinese situation, of course, is reflective of what's going on in China, which is reflective of the trade war we're having with China, which is reflective of what's going on in the United States. So that's a complicated way of saying it's all connected, I guess. Yeah. What was interesting to me also about that Chinese PMI is it said, well, there's two parts that are weak. The external part, in other words, the export part, you know what's coming next, right? Yeah. And the internal part, right? Yeah. And then, which is to say, demand for domestic manufactured goods. And, you know, to the extent that the Chinese economy was shifting from being an export-only economy to one that's also driven by internal demand, you know, there's no place to hide. Right. Because, again, you know, you can sort of maintain that they're not connected, but they are connected. Both the internal engine of a country, particularly this country, and the externals. Well, and another thing, you know, specifically with China, is we know that internally, you know, most notably, we know the government will do anything possible, continue to keep that economic engine growing, but you can't fake external orders, right? At a certain point, people are going to stop buying from you if they're concerned about where the economy is heading. And I think this survey, you know, and it is what you would consider soft data, right? You're calling up people, you're looking at how many orders, hearing what they're telling you, but this data continues to point to a scenario in which fears about a slowing economy create an actual slowing economy. And this is sort of what many economists are so concerned about with the decline in stock prices, with the slowdown in business confidence, that just by being afraid of something, you actually realize it. And this is what when they point back to Smoot-Hawley, you know, back in the 1930s, and they say, you know, when you got these protective tariffs up, and when you started the end of globalism back then, that people pulled in their horns and said, well, we're just not going to do business overseas, and we're going to wait this thing out, and maybe there's going to be a slowdown, so we're going to wait this thing out. And that just gets exactly to your point of it being self-fulfilling, which, you know, so much of this rests with confidence and anticipation and guidance and forecasts. And when you're concerned, you don't spend. Yeah, well, as George Soros said, the reflexivity of markets in the economy. I know you made it through that whole book, Miles. No, I only read the first part, but it's very good. Alchemy of Finance, in case anyone was wondering.